it's a slow week, but
not the best. I've got to be honest. Just very low volume in London, very indecisive. We're looking at the whole of March really is scatty because from here it's 1st of February and you've got price action. It's quite nice. It's it's flowing, and then March, it's obviously the third month in the quarter. We've got this huge consolidation, and then just kind of crazy big moves, indecisiveness, but we made money, so that's all that matters. I think Yuan, he was supposed to be coming in. He was messaging me yesterday, but I'm not sure where he is. I haven't heard from him this morning. He lives local to me. He's been over the house a couple of times. Been sat in the office here with me.
Oh, cool.
Yeah, I met him at one of the bars in Saundersfoot where my wife works. I just got chatting to him and he said, "Oh, I'd really love to get into that." And so I invited him up to the house and he seems to be getting on all right with it. Some people come in and they just sort of hit the ground running. Some people take a little bit more time, but of course everybody's got different things going on in their lives, and some people work, some people don't, I suppose. Some people have other things going on after work. So right, what do you want to go through? Do you want to go through the 15-minute strategy guide, or do you want to? Because you trade footprint charts still.
Mostly, yeah.
How's that going?
Good.
Yeah,
well, February was slow, but these last few weeks have been better.
Yeah. I think February was January, February were all right. I think January is January's pretty terrible normally, but February was good. March for me has been pretty good. I don't think I've lost a trade in 2 weeks, which is good going. Quite happy with that. But I've taken a couple of break evens. But what I'm doing is I'm trying to take my profits quicker. And I know, a lot of people say, 2 hours, not much. But if you add that up over, how many 2 hours can you get in a week or in a month, and then you compare it. I was talking to Kurt Logan. He was we had a 1-to-1 yesterday, and he's got a problem taking his profits because he's trying to hold his trades to the next area of imbalance, or he's holding his trades 90 plus 100 plus pips, and then he's getting break even a lot of the time. He doesn't want to trail his stop loss, so I try to give him like a different method to take his profits, where like when I first started, a lot of signal companies will give you take profit 1, take profit 2, take profit 3. So what I said to him was instead of holding on to the whole position, when you get say to 1 hour, take half your position off. When you get to 2 hour, take a quarter off, and then when you get to 90 or 3 hour, you can either take the final bit off, or you can place your way out of it, so you're still holding a trade. You're not looking to get into another trade, because obviously with Forex, it's not what you do well, as everybody is always told. It's what you do consistently. If you can hit 2 hour, I don't think I take many trades that don't go into profit. If it doesn't go into profit within the first sort of 30 minutes, I'm thinking about pulling myself out the trade, because I'm either wrong or the market's just going to move. So for me, I'm happier to take my 1.6 or my 2 hour, be done by say 11-12 o'clock. I do not like holding into the crossover. That's one thing I really do not like. I don't like holding into the crossover from London to New York, because 9 times out of 10 that trade will come back to my entry and it will either tag me out, and then I'll panic and I want to sort of re-enter the trade, or I have to reanalyze. And a lot of the work goes in the morning is analysing the trade, watching the candlesticks, which way is it going to go? Is it going to go the way that you want it to go? And then by the time, you know, you've done all that and you've entered, you know, it's a lot of thought process goes into it. You're not just pulling the trigger. I mean, my system will show up on the 15-minute time frame, and we'll get, you know, like so we'll get like a run into the level, and then maybe we'll get a doji candle just above it, and if we get the next candle confirming down in the opposite direction, you know, there's your confirmation. And then the basics of what we're doing is we're ideally we get, you know, 5 pips above. I'm paying attention to the numbers on here, but we get 5 pips above the high of the wick. We're looking for an entry point anywhere sort of between the close and the manipulation point. So, you know, you could be entering sort of 50% on the manipulation point, and then just take your 2R, and that's a very easy system. I mean, once you've set your charts in the morning, you can actually trade this system off your phone. You just place an alarm for 3 pips behind the manipulation point, wait to see if we get the confirmation. If we don't get it, obviously don't take the trade. If you do get it, you enter the trade either on the close of the candle with your stop loss above, or you just put a limit order for like the 50% retracement area. I tend to be using the 5-minute more often than not to get my entries now, because I think I'm getting better entry positions. So I'm getting a shorter stop loss, but it's giving me more trades as well. So there was one around here somewhere. Let's see if I can find it. Because you obviously, with your 5-minute, your 1-minute entry system, you're looking for a very similar sort of entry point to what the 5-minute is. The thing with me on the 5-minute, on the 1-minute, is it gets very noisy. So I think 21st of March, let's say our manipulation point was, let's do this properly, let's go to replay, and then let's go down here. So I would have been looking at a manipulation point here. Yeah, it would have been just above, so always to the round number. And you see you've got like a double whammy. Okay, you've got your confirmation here. You could have entered on the pullback. So we had the break. We've actually had 2 candles close above here. So that would have ruled this level out on the 15-minute time frame, because generally speaking, when I sort of started using this method, 2 candles above, 30 minutes above the manipulation point, it's always like there's not enough liquidity there, because when these levels get liquidated, the price generally just moves very quick. So you want to be in on sort of this candle or this candle. So let's say we got a pullback around about here. We just go like, I don't know, 22 pip, take profit, and stop loss. You're looking for 2R, which you would have got, but especially around about from I think August last year, the amount of trades I was missing because of this was really getting on my nerves. And then you start sort of trying to, you know, enter trades that maybe you shouldn't be in. I'd enter this trade anyway, and it would have carried on going. So we dropped down to the 5-minute time frame, and you can see like the accumulation here, right? So what I would then do is I'd sort of mark off these lows. Okay, so you've got that point there, and if we then want to find out where the highest point of, you know, where's the point of control in this area, I would use the fixed range volume profile. Can't get to my indicators. Why can't I get to them? See if we've got one on here. We'll find that. The zoom buttons are in the way. I can't see the oh my days. There we go. Right. Technicals, profiles, fixed range. So what I do is I'll place like the fixed range volume profile over over the 5 minute consolidation, because this is like an M formation, and again, like, we don't trade formations and that, but they're very handy to like find these accumulations. Where's the point of control? So once we've like had this formation, you can see it's a top information here. So we've got this area where price won't break above here. It's kind of bouncing between the manipulation points and this double top. So it's almost like a second liquidity grab for anyone who's entered too quickly on this sort of downwards movement, or even this candle here, because a lot of people use a zone. So their zone might be something like that, and they're entering here. That's the first breakout. Well, we haven't really got a break of structure. We've just consolidated around here. We've come back up, probably taken out a little bit more liquidity, but this candle here tells me that, you know, price is going down. Then we've got the second one. So when this kind of thing happens, we've broken these lows here, we've actually broken out of the consolidation as well. So now I'm looking at getting in on this point of control here, and we kind of want a low volume, or you just pull the trigger on it, because I mean, I like this entry method. I generally go a bit tighter then as well with my stop loss. I won't give 5 pips above, because if this is a liquidity grab and this is a liquidity grab on, you know, anyone who's got in short here, the chances of them coming above here are very slim, because the liquidity's been taken twice. If they're moving up, this formation here, this doesn't happen. That's a hard push down. So the sellers are now taking control in my mind. And if we can get in here, you know, sometimes the chances are we're going to be too late. Your stop loss is going to be, you know, a lot bigger. And we still look for, you know, a 2-to-1 minimum, but you're now looking for 77 pips. Whereas if you're in, you know, on this point of control here, or this point of control, it's the heaviest volume. Where's the heaviest volume within this area of consolidation? We've now got a 20, like, let's call it 22 pips. We're only looking for 44 pips to get you 2R. You know, and in this sort of circumstance, I would have my take profit maybe open. If we get this kind of blowout through the bottom of it, well, I'd just close it where I feel like. You know, if it starts pulling back like that, I'd either be, you know, with this kind of move, I'd probably trail to 3R then, something like that, and then I'd get stopped out of 3R. Or, you know, if I see 4R on the table, I'm going to close, because that's the equivalent of me taking 2 trades throughout the week. So you would get that and understanding. I think pretty simple way of doing it, but like I said, this 15-minute system, you would have missed it, which would have been, you know, pain in the ass. And you're sitting there and you think, right, okay, well, that level's gone. I'm without a trade today, and that was happening so much last year that obviously had to adapt to what the market was doing, because inevitably it's moved down, and I would have got my take profit. And you sit there and you watch that happen later on in the afternoon, and you haven't pulled the trigger because it doesn't fit your system. Sometimes you've just got to adapt and change to what the market's doing and what it's telling you. And so far it's working very well. So right, have you got anything you want to ask on that, or pretty straightforward.
No, that was clear thing.
It's very clear. Yeah. It's a tricky old year. We're getting a lot of this sort of ranging, and again, that's something I like about the system that I teach, and it's very good for beginners, to be honest, because it's a rule-based system, and I had a mentor a couple of years ago, and he'd teach me about price action, he'd teach me about double tops, he'd teach me what a flag pattern was, support and resistance, trend lines, but it was never any strategy. It was I'm using the 4 hour to analyze, which for me the 4 hours is the levels on that. There's some of the strongest levels. I'd rather use a 4 hour and a daily level, and then adjust it down to the 1 hour, because I think there's a lot of day traders that have got their eyes on the 1 hour, obviously, and then the 15-minute. I think which was a trade we had on the Aussie. The Aussie's done my nutting this week, because I was in this trade, but I closed at 1.6. I closed at 19.5, something around 18 pips it was. Is that your Discord?
Oh yeah, can you hear it?
It's going crazy. It doesn't matter. So again, similar process that I used here. Sometimes they do look a little bit different, because this is more like very similar to the entry that you use, and some of the 1 minute scalpers use. So you kind of got your breaker structure somewhere around here, is it? Again, very difficult to get in there. But if you had this structure marked, I suppose, which is a little bit intense, but we've got this break of these two lows, so we've broken these two lows on the 5 minute, we've come back up. I kind of respect the trend line, I suppose, but it's you can see the market's changing and altering. Getting the fixed range volume profile on here is very difficult, but I think the fixed range volume profile was sitting around about just below, I think it was, over this accumulation here. And again, I actually entered on this pullback with my stop loss above. It was 12 pips it was, so it was around about there. It just never got going. I thought it was going to just go, but again, the market being the way it is at the minute, or last week, I didn't say the market being the way it is, because it's been quite profitable to trade the market over the last couple of weeks. But as soon as I break through here under this sort of 5 minute level, that's where I move to break even, and it can do what it wants. Then I pull my stop loss into profit, maybe 2 to 5 pips depending on how far price is away. And, I've got 12 pips stop loss. I'm only aiming for 24 pips, but it's not getting anywhere near it. And again, I've closed my trade. New York's open here on this candle, pulled all the way back up to break even, and then it's only come down to this level here. If you look to your left, there's not really anything apart from these candles. There's no reason that we shouldn't have been coming down to this. I think I marked. Marked this level off, and the 200 EMA was there as well. Probably moved now. It's around about there. So for me to take my profit there with 2R, I didn't see any reason why that wasn't going to go all the way to the bottom. But we kind of just come off this sort of area here. Again, the second day yesterday, I was actually taking my wife to work. I marked this up because we've got a similar sort of thing. We've had a deep stop run overnight, and when we slam back down, as we did, we got like a high here, and then we're almost getting lower, but we've got a lower high here. You can see we've come back up to the manipulation point from yesterday. We've pushed down hard here, so you just enter on the pullback and the 50% of this candle, and I'm getting a miss that because I went 3.4R, possibly 4R, did it? And it happened in just a couple of minutes. So I ended up in a gold trade yesterday, and again similar sort of process. Let me get rid of that, and I'll put that back on. This was a little bit different because that's the accumulation for me there, but the point of control was higher up, but I wanted to enter on this kind of retest of, you know, maybe midpoint of this candle, and I wanted a 300 pip stop loss. And when I was watching it, I could see the volume was getting lower and lower. I was on the 5 minute. I think we had a couple of little small candles here, so I thought, you know what, I'm just going to take the chance on this, because inevitably I thought, again, we're coming down to maybe these lows here. Once we've broken this structure, we'd done this kind of thing. I thought 1,000 pips was going to be, you know, quite quick, but I moved to break even very quickly as well, because it was Friday and I wanted to make sure that I was securing profits for the week, and I was 1.6 hour up. So yeah, I think moving to break even pretty quickly was a good idea. If we look at that formation there, what happened the other end of, you know, the kind of like the upside down version of it then, is we had this consolidation. Once we've broken above the manipulation point, so you can, you know, market your accumulation like that, just candle body to candle body. Once we've broken out here, we've got this kind of effect, which is what we had yesterday. We broke out here, and price just kind of consolidated a little bit, tapped back on the manipulation point and skyrocketed. So I was expecting that same thing to happen, but upside down, you know, going short instead of going long. We had CAD news here, which, yeah, was a bit crazy. And then, you know, eventually about 6 o'clock in the afternoon, it did come down to my take profit. Just, I think sometimes the timing in the market as well. And it was the last day of March, last day of the quarter, last day of the week. Volume was very poor. So, yeah. Right, do you want to go through anything in the blueprint that you're unsure of in terms of, I don't know, ADR, the rules behind the where a place?
Can we go over the entries more, like when you would, and it would be invalid, or when you'd still be okay, right, okay, if it goes over?
If let's not go with gold. GBP USD hasn't been my best friend this month, because the manipulation points haven't quite been very. The price has been so scatty. I think the levels have been very difficult to select. Maybe if we go stick with the Aussie. I think this went on New Zealand dollar yesterday, was it? Yeah. Okay, so try to find these levels first. So that would have been a level there. Okay, we got these lows, we got these highs. Okay, we'll be looking for something around here. Leave that where it is a minute. What would happen, you know, I'm looking to go long from this area, and we just adjust this up to the, so I always go with the manipulation point to the 15-minute time frame, and I'll always place it, I like it to be clean, alright? What I mean by that is I don't like to put the manipulation point there where there's a close above, or maybe two closes, or an open and close above. I like it to be clean. So again, I wouldn't have my level here off this, because we've broken above here. This is way too scatty, and it's a good way of making sure that all of your points that you're looking at, they're all like in the same area. It's for consistency, obviously. We've had, okay, so this move forward, we've come back down to the manipulation point, okay, where you should find liquidity. This would be a consolidation area, and again we've broken out. We haven't come back down to it. We haven't come back down to it here. So you know, you see these smart money guys, they'll be saying, you know, that's liquidity. We're going to take the liquidity from underneath there and go forward. This area though, and this would have happened in the Asian, so I wouldn't have been awake here. But we've come down. We've basically closed below it. 1, 2, 3, 4, 5 candles below. If I was looking to trade this on a 15-minute, I would suggest that normally that would more than likely continue down. In this instance, it obviously hasn't. Again, we haven't yet come back to it, so we'll probably have a point of interest here next week. Maybe I'll be looking to trade off maybe 26.05. So again, I'll be looking for a formation here off this one to go long. This would yeah, the amount of candles underneath the manipulation point for me would rule a level out for taking a long trade, unless of course we have a very strong push away and then a low volume retracement. I generally take my eyes off this area as soon as there's too many candles close below it, because as I keep saying, if there's liquidity here, and it may be because it was in the Asian session where there's generally lower volume anyway, but this amount of candles, you'd think, well, if the liquidity's there, we're coming down, and sometimes we're just going to wick off it and we're going to go. Sometimes it stalls to the outside because it's collecting a few more orders, but if we drop down to the 5-minute, suppose we could potentially have got in on this area here, being a breakout, come back down. Let's get this fixed range volume profile. So you'd be putting your volume profile over here. Yeah, there we go. Right, so if the breakout occurs as we've seen in the other two, so the GBP, JPY and the Aussie, when the breakout occurs, we've come out of here quite strong. We haven't quite broken structure, but I suppose if you maybe drop down, just pull this back so it's easier to replay. So we've broken out here. We've actually broken these highs. We've come back in deep, which is quite unusual. But your stop loss prevents you from getting into trouble here. You've broken out, okay, you think, right, okay, we're going to go long now. We've broken these highs, broken out of consolidation. You can mark your consolidation off, because when you'd be looking at the chart, you'd actually be looking at it, like that. Okay, there's your consolidation. We're about to change direction. You could, and this is what I was saying about the entries being better, more precise. You'd have your order here. Okay, so that's only 4.4 pips to the low. So you go, just say, right, okay, let's stick a 10 pip stop loss on it, or 5 pips would be what I'd normally say. So let's just say we're going 9 then. You enter on the point of control on this. We're running out of time again. 10 minutes, so we got plenty of time. Enter on the point of control, or the high volume area of this accumulation, and then you're only looking for 18 pips to get you 2R, which has happened, pretty quickly. Let's go to 30-minute. That's taken 1, 2, 3, 4, 5, 6 candles. So, and what? hour and a half, 2 hours. Yeah, no, 3 hours then. My maths is terrible then. Saturday morning. Yeah, so it gives you a better entry, I suppose, a better entry and smaller stop losses. You know, potentially you could have held that, you know, throughout the whole day, because it's the Asian session. Let's cancel that off. This move actually went. There's 8R there. You know, that one trade is, if you'd held it into the next day, then into the Asian session, that one trade passes your well, not the FTMO challenge because it's 10%, but with a 1% risk, that passes most funded challenges just by using this small method and having the patience to hold it. Because ultimately, you'd be looking at this as a target if you know, properly trading day by day. I think the New Zealand dollar is ranging and has been ranging for quite a long time as well. So with the market, it's moving up slightly actually. You can see it's moving up, but it's not really getting past this high point here. I looked at this on the daily the other day, and it's like just a mess. Just not going anywhere. But for scalpers and day traders, it's a great pair. I know someone that I used to talk to a lot on Instagram, and they would trade New Zealand dollar every single day. They wouldn't trade anything else because they know that the stop losses could be really small. I mean, you could get in with a 5 pip stop loss there if you wanted to. Obviously, because it doesn't move as much as the GBP or the Euro pairs. You've got 14R there if you just hold it to the high, you know, or even just close out at the end of the day. You've got 58 pips, you've got almost 12R. So I do quite like this pair, and I like the Aussie as well, but they don't tend to move much in terms of pip value very quickly. On the plus side, you actually get to use smaller stop losses. So although they're moving, you know, 30-40 pips per session, you're not having to hold out for, you know, 100-200 pip moves to get big risk rewards. So yeah, we are running out of time on the Zoom because we're still on the free version. So have you got anything you need to ask quickly, or I'll get this video posted up at some point. I'll check it back and make sure everything I'm saying is all right. But yeah, anything else that you want to add to it, or?
No, that was clear. Thank you.
Right. Okay. There's a few people that were going to show up today, and it goes like this. I think last time I had a 1-to-1 with Michael. I had a 1-to-1 yesterday with what's his name, Kurt Logan. I think I got a couple of 1-to-1s coming up with Ewan as well. So yeah, it all helps. I think when you get the ability to ask the questions live on a screen or a Zoom meeting, it's it is very helpful. I used to go to a lot of Zoom meetings. But they were like at 9 o'clock in the night, and normally I'm in bed by then. Because I gotta get up early. But right, okay, we'll wrap it up there then, Robin, and we'll I'll get it posted up later, and hopefully it's been helpful too. If you have any questions, you know where I am, DM or in the chat room, and hopefully we'll have a good trading week next week.
Yeah, thank you.
All right, cool. All right, I'll catch you later.
Okay, see you.
All right, bye-bye.